Good morning and welcome back to Almus Market Mornings. While the conflict in Iran goes on, as time passes, the intensity of shocks in investors' mind reduce. It's a natural human tendency. We saw limited impact from developments yesterday, despite US sinking an Iranian warship in the Indian Ocean or the Senate blocking proposal which would require congressional approval on further US actions in this war. Risk assets have seen a good recovery after a substantial sell-off, backed by a bit more positive US equities, which saw a jump as the ISM services PMI shattered investor expectations, coming in at 56.1, which is the highest since 2022. Uh, Good morning, JK. Seems a bit more positive start to the day, but the question for all of us would remain on Rupee, which hit its lifetime low yesterday. Are we going to see a move towards 93 now?
Good morning, Swaraj. That's a question that will need some time to answer, but I can say with certainty that the trend in the USD/INR, the larger trend in the USD/INR has not changed. And, even if there is a dip in the USD/INR, so long as RBI or the PSU banks use those dips for buying, it will serve as the signal to the market that they don't want rupee to appreciate, and the market keeps the same bias of buying USD/INR and not selling the USD/INR for the time being. So that's the overall picture for the USD/INR. So what we need to see is a large inflows starting consistent, and then uh, buying by PSU banks, which is taken as a strong signal from the market. So in the meantime, overnight, there has been a significant improvement in the risk. US markets closed quite strong, I would say, recouped quite a bit of losses of the previous day. And Asia has been very strong again. Japan up 2.5%. South Korea at one point of time was 12%. Of course, it had lost 20% plus in 2 days. Good recovery. Australia also, and even India's Nifty futures in the offshore market is up about 100 points. Uh, Currencies also recovered. Euro at 1.1640, and dollar yen is also down at 156.60. Rupees trading at 92.12, and it's not very far from its all-time high that was hit yesterday. What triggered, of course, is a couple of things. Uh, Market somehow in the last 3-4 days quietly discounted what is going to happen, and after a certain level the escalations have somewhat tapered. So I'm not saying war has stopped. It's like the bombings have continued, missile firing is also continued, but the market's worst fears might have been whether the nuclear facilities are attacked, or whether any threats of nuclear explosion or any such thing, severe. Those things have not happened. Another thing is, day before yesterday, Trump announced his own government's ensuring insurance for the ships passing through the Hormuz Strait, and they will also be escorted by the U.S. Navy ships. While the market was skeptical about that, in the meantime, there has been even Saudi Arabia has built its own pipeline, which does not depend upon the Hormuz Strait for supplying the oil. So that's another reassurance that the market has got. And so there is some retracement in the oil, and oil, of course, has been the lead indicator for how the war-related risk is moving. So that's the reason why we saw yesterday US markets recover, Europe markets recover, and it's continued into the Asian times. But then, it's not take time to be complacent, because no one. And of course, I forgot one more point, that there was at some point there was an information or report that Iran is ready for peace talks, and this was indicated to the CIA. But later on, they have denied, and but still, perhaps while that may not be 100% true, market thinks that something is cooking on the peace talk. So these are the things what my market found as a basis for somewhat retracing the severe sell-off that we have seen. We'll see. We'll have to still look at the news flow and how the two sides are approaching. Trump himself has warned that the war can go on for 4 to 5 weeks, and that's something that the market is now prepared for. Now, if it is something more severe, then that will have to be discounted. Now, what will now happen is market reverts back to assessing the economy, market valuations, etc. And that is for that there was enough food yesterday. We saw the US ADP job numbers came at higher than expected at 63,000. Market was expecting 50,000. Previous month's number was revised down from 22,000 to 11,000. But what's also came out from the ADP report was that employees' wage demand power has actually reduced. And with the hiring also concentrated only in a few sectors, data is showing that widespread pay benefit is not seen for new employees, and only the existing employees are getting the better pay. So wage inflation is probably on the lower side. ISM services for the US climbed in February to 56.1 from 53.8 in January. Market expectation was much lower, and this is the highest since August 2022. And the growth was driven by a sharp pickup in business activity. In fact, new orders were also higher, employment was higher, price pressures were somewhat lower. And finally, we had the Beach Book survey, which is the survey which is conducted by the regional feds. And the report painted cautiously optimistic but yet mixed picture of the US economy, with growth persisting but somewhat uneven. No major concerns have been expressed, but then it's a kind of neutral report which remains cautious on the outlook going forward. Now, market has more things to digest. Today, we have the challenge job cuts data. Last month, it came at a very high number, 108,000. Now we have also the jobless claims, weekly jobless claims, which of course is quite a volatile number. Tomorrow we have the non-farm payroll number. Non-farm payroll number again, last month we had a beat at 130,000, but this month is expected lower at around 60 to 70,000. Unemployment rate expected to be at 4.3%. So while we keep an eye on the war situation, we also are, now turning our attention back to what the economy is doing, and more particularly how the inflation is going to pan out in the coming days. Because as we shared yesterday, Eurozone inflation has gone up. There are indications that Europe might be seeing a rate hike as the next move. There are reduced expectations for a rate cut by US in the month of June when they meet in June. So these are in the minds of the markets. Yes, it's kind of slightly more sober atmosphere, not entirely out of risk as we enter the day today. As far as the rupee is concerned, yes, we hit a new all-time high at 92.30, and that was again, as with a gap up opening and the market not seeing RBI until we saw the high of 90 to 30 levels. And what is also significant is that we are seeing the FI number significantly on the negative side in the last few days. And in the month of March, we already have almost 1 billion of outflow. February had seen good inflow for about 4 billion. So the last few days have been quite negative. Stock market also, we know it has taken a big drubbing. Again, possibility of stock market rebounding. But one thing that we can see is that in India, at least, the rupee is not really reacting so much to the stock market gyrations. So even if we do see a recovery in the stock market, rupee will have its own factors to determine its course, the flows, and what the RBI does. And important point to note is that forward premiums are now much higher once again, 2 rupees 60 paisa for 1 year, and rupee at an all-time high of 92.20. I don't think it's a very big incentive for importers to go ahead for any forward hedge, but the reverse is true for the exporters. for 1 year forward, if you are getting close to 95 or 94 half and above, I think that is a good place to put some hedges, if not everything, on the books. So I see some attraction for the exporters emerging at these levels, and it could perhaps draw in more people to hedge if stability is seen in the situation in the Gulf, and oil drifts lower again, and dollar P fails to cross the all-time high seen yesterday. So we are in the neutral zone as we start the trading today, and we watch how the risk sentiment pans out during the day. Thank you.
Thank you, Jack. And yeah, we are starting the day with a positive risk sentiment. Asian markets look good. Equity is all across, even South Korea has seen significant recoveries. Oil has also retraced a bit. Dollar also has had some losses after yesterday's gains. So that's the emerging theme. But moving on, the focus has once again shifted also to the data from the US. Um, so if you look at yesterday's data, ADP numbers showing that wage inflation worries were on the lower side. ISM services was also a solid print. New orders, employment was higher, whereas price pressure was lower. Beige Book, which is like a survey, also printed a mixed picture of the US economy, but no major concerns. So overall, the economy is holding up. That's what it is painting a picture. We have to look at the unemployment rate and NFP number tomorrow. That will also be an important data point to look at. When we look at our own domestic markets, FI number has been on the negative side for the last few days. This is a significant driver of rupee. March has already seen an outflow of $1 billion, and that's also keeping rupee on the weaker side. So till the time we see some substantial inflows, substantial and consistent inflows, the scope for appreciation might remain limited. That's it from us today. Thanks for listening. We will catch up tomorrow with the fresh round of updates.